Good morning, everyone. Today is the 3rd of February. This is Brad Matheny. And again, we're setting up a very big breakdown in the markets. The SPY is down at 591.69, breaking very hard to the downside, just like I predicted. You're going to hear that quite a bit today. I'm sorry to keep kind of beating your head with the fact that I've been nailing these market moves, but it really behooves you to pay attention to what's going on and to understand that I called a major topping pattern here. We rolled through this peak into last week. I kept telling everyone we're moving down into this lower deep V bottom. And, of course, we had the breakdown on Friday. We had the big breakdown on Monday. Now we're breaking down to new lows. At this point, we're going to open 591.82 or lower, probably below this gapping window here that I warned would be our next potential support area. We're probably going to get a bounce over the next day or two after today, maybe even starting today. And then I think come Wednesday, Thursday, Friday, we roll down into this lower trend, moving down into the 581, 584, 585 area. So, we're breaking down, and the next big move is going to be this right here. Okay. This is going to be the next big move for the markets. It's really kind of moving into this range. Keep it a darker color. It's moving into this range next, coming down to fill this. So we're going to break down. If I can show you what I believe is going to happen, we're already breaking down. We've got a huge breakdown in the market. And what we're looking at is a move pretty much as I've drawn it here. We're looking at a breakdown, which we have today, moving down into this consolidation channel, up into probably Wednesday, and then moving into a breakdown pattern through here, into deeper consolidation here, and then into our deep V pattern rolling across here. So, I mean, I've drawn these things repetitively, and yeah, I know I have a lot of drawings on my chart, but pay attention. We're doing this breakdown mode right here into this area where we're going to run into some consolidation and then break downward here around Thursday, Friday, and maybe Friday, even getting down into this 577, 576 area. I see the markets as moving into that deep V pattern, trying to find some support and really playing out very cleanly through this move. There's, like I told you guys, there's a lot of money to be made through this rotation. Okay. Today is just going to be one of them. I'm going to get, if my followers, which I know they were prepared for this downward move. I got a message from some of them over the weekend that they picked up some puts on Friday. Some of them called them lotto puts. It's pretty easy to do. You can pick out, if you have this kind of information, which I want you to be aware of. I'm handing you very clean trades almost every week. You guys should be able to make a fairly consistent amount of money off of my research and my predictions very easily. I mean, it doesn't take too much to figure out that you can go in with some put options or some call options, or actually both. You could create a straddle or a spread, and just basically trade the direction of my predictions with a smaller counter trend trade, running a 15 or 20 or 25% risk on either side. And then, like I said, generally my predictions are going to be, 70, probably 65, 75% accurate, maybe a bit higher. And especially if you're able to position for these moves, like I had a client write me on Friday that he made over $55,000 trading ES futures in 15 minutes. Yeah, in 15 minutes. He just nailed that breakdown on Friday and made a small fortune. And again, that's what this is all about, trying to make you a better trader by teaching you how to understand these patterns. Now, I've gone through the data, the breakdown data that we have here. Okay, we've got the excess phase peak pattern moving into consolidation, moving into a bigger breakdown pattern. Then at the same point in time, we have the big broad excess phase peak pattern, which I'll come over here to 2 hours. In fact, it's probably better if I do it. Let me see what this is. Okay, this has got some code on it, which I'll close. Nope, not that one. Not that one. That's the gold and silver. Okay, we'll use this one. So this is the SPY. This is a 10-minute. It shows you the sideways flagging. Let's go down here to 2 hour. Okay, this is probably a pretty good example. There's our basing and bottoming. This is a big expansion pattern. I'll leave that for now because I think I need that. And then I want you to see this purple area right here. This is the bigger, broader excess phase peak pattern. So when we start looking at this excess phase peak pattern, this blue line is what we're dealing with right now. Okay, we're looking at a breakdown down into this area, 591.67, which confirms this smaller excess phase peak pattern moving into this breakdown mode. Likely going to try to move into consolidation, probably right around this area. In my opinion, that deep low that we're likely going to get around February 10th, 11th, 12th is likely going to be the start of the consolidation phase through this area, moving down into the ultimate low eventually. Whereas this breakdown as well, the purple, looks like we're going to be moving into that same type of consolidation phase. So ultimately, guys, I think we're moving down into this 575, 578. I'll mark this to 575 to 580 area to try to find some real support down in this area and consolidate back up into this peak, which is going to come probably around March 3rd, 4th, 5th, maybe 6th. And then we're going to roll back down into an ultimate low back over here. And there's our ultimate low, 550, 560 maybe. And that's a really good example. Now, remember, we can invalidate at any time. We can rally back up to these highs, but we have to get above, this high here. Do this in a dark green and 4. And we have to get above this high back over here in order to invalidate. Right now, we are watching the breakdown of this level, which we've already gotten in blue. And that's going to put us down into this lower range. Remember, we're 591.80 right now. We're coming down into this low. We've broken below this gapping area. We've broken below the consolidation area. We're moving back into that middle range, Fibonacci middle range support level, which is going to be roughly that area. And we're right in the middle of that area. So that's where we're going to be looking for intermediate support right now into the area that we're in, and we're likely going to get a bounce. So give you an example, folks. We're likely going to get a bounce here into this low. If I were to come over here to the hourly and try to show you, we're going to be opening down here near 591.5 roughly. And more than likely, we are going to get a bounce up in this area before we roll downward into this low, this deep V. Okay. So expect a little bounce here. And when I say a little bounce, that could be a 0.5%, 0.75%. We could move from the opening level 591, 592. You see, we've gone up just a bit here. It looks like 592. We were at 591 earlier. There we go, 591.90. We could see this move up into 594, maybe 594.5. That's this low, then roll back down. So we do have a chance for a little bounce here for a day or two, and then I think we're going to roll back down into Thursday, Friday. So be aware of that activity. And again, we're looking at a breakaway pattern today, which is exactly what happened. We get a rally in carryover mode, a rally in trend mode, and then we get a rally in counter trend mode, which I think is going to be the breakdown, carrying again into this crush and evening star pattern. So again, be aware that we're looking at a fairly continued downward trend. Now the QQQ playing out again, just like I predicted, down 513. We're actually down to 513.11, down 1.7%. Looking for the markets to again try to break downward. We've really got to look at this from a breakdown structure. You can see this excess phase peak pattern playing out. And again, here's my predictions rolling down. You can see I've already drawn them, moving from the current level down into this level, eventually finding support. Again, we're looking at kind of a breakdown bounce, maybe down into this lower support level. Then we are going to ultimately break down into that deep, deep low. Okay, so again, I should probably draw my markers on here. February 10th, 11th, it's roughly right here. February 21st, 24th. So we'll go here, 24th. And then March 21st, right about here. So if I were to redraw this based on the times of my cycle patterns, we would be looking at a breakdown, bounce, deep V, consolidation, deeper low, and then a breakdown into the ultimate low, trying to move up and out of it. And that would be a pretty good outline for what's likely to come. So remember, we could find some support around this 500 level on the QQQ. I think this secondary low here near March 24th, 25th, which is really marked as the 21st, but could be that Friday. The 21st is a Friday, 24th is a Monday. We could be looking at a moderate breakdown low, trying to get out of this area, consolidating hypothetically into a flag, which I've drawn before we get into a breakdown, and then moving towards the ultimate low down here. And I think that's a pretty common outline of what's going on. Okay, gold and silver. We're going to move to gold and silver. Excuse me. And we should have gold and silver right here. We're moving into a crush pattern. Gold and silver in a crush pattern would typically be some sort of a downward move. We're getting kind of an upward move here, based on this fear move to the downside. Want you guys to be aware that gold and silver are moving in a very explosive phase. So I don't think we're going to have a whole lot of downward trending unless there's a lot of panic in gold and silver. Pullbacks like this should be viewed as opportunities to try to get long. We're in this massive expansion phase. I've highlighted it before in multiple videos. In fact, if I come back over here and go to gold, try to bring it up in auto scale, it should draw. Yep, there it is. So let's go to 4 hours. That big yellow box you're seeing right there, guys, that's the expansion phase. And where we're at with this is it's actually kind of scary. I can shrink it all the way up and show you think that's as far as it'll go. Okay. So we've gone through the setup phase. We've gone through the breakaway phase. Many of you have been following me through this entire time frame. Even though I started doing videos back over here in June, July for TradingView, I actually have been doing other videos, let's say, way back here for gold and silver, way back in 2021, 2022, 2023, and laid out this entire plan that we were going through the setup phase back over here. We were going to move into the breakaway phase back over here, which we did. And then we were going to move into the expansion phase, which is here. Now, the expansion phase, if you've been following my research, is a massive wave of expansion. And this is what a lot of people don't understand, is that the expansion phase should drive gold to accelerate excessively up into the 4,500, 4,400 area, possibly within the next 4 or 5 months. So we're talking about a huge rally, a potential doubling of gold. Call it let's call it an 80%, I would imagine. Do a quick measurement here. 2647 is 61%. So 61%, you're talking about a huge move. Sorry, guys, early morning. The next big move for gold is going to be 31 to 3,200. That's my opinion. It's going to rally right up to this area, probably by March, April. Then we're going to consolidate. Then we're going to rally all the way up. It's going to be a little bumpy, but it's going to be a great ride. And it's going to probably target this 44, 45, $4,600 area. And then we consolidate. And I think we consolidate through the end of this year into early 2026, maybe March, April, May, and then we start to rally back out of it. So we're looking at a big rally here for gold and silver. And the next big move here is, like I said, 3,100. So this breakaway here, this move in gold, this crush pattern, looks like it could be playing out here to the upside. And it could be this reaction to the fear in the markets right now. We're getting a very solid upward reaction on this crush pattern. So, I'm not going to say that we're out of the woodworks yet, but this is a good solid move up. I'm not seeing any downward activity. Typically, a crush would be to the downside, but we're getting this big, broad rally. And as long as, like I said, we continue to see this rally phase continue to play out, we should be looking for a move above this 2850. So I'll draw it here. Really a good solid rally above 2850 and staying above the 2830 area would be indication of a very strong rally, meaning protect this level. This is our stop or warning level. And the same thing back over here with silver. We're looking at this 3190 level probably as a persistent level. This is our breakaway level here, meaning this is where we would look to try to get, into a big rally phase. And as long as we can stay above that 3240 area today without retesting this 32 area, we have a very strong crush pattern to the upside. Again, the reason I'm doing this A or B type of scenario is crush patterns typically are to the downside. So, I mean, we have seen big crush patterns to the upside. They set up sometimes, and we could get a very strong rally here in silver and gold with a big crush pattern. Now, be aware that we move back into a flat down pattern and then a momentum rally in counter trend mode, then a blank day, then a breakdown. Then we move into the stalling, topping, gap flush type pattern all next week. So this could be very spotty, choppy expansion is what I believe is going to look like. So hypothetically, we rally through this week. So we rally up through this week, consolidate into next week. We get that crush pattern, and then we roll back out of it. Something like that is what I would think gold would be trying to do. In fact, that's probably pretty darn accurate. Okay, so let's go back to the last one, which is Bitcoin. And boy, oh boy, you're going to hear me say it again. 94,000. Come back over here to 4-hour auto scale. And I just have to say it, guys, just like I predicted. Again, I don't know how to tell you guys, yeah, my charts look cluttered. I get that. I got somebody wrote me the other day that, my charts are full of squiggly lines and, I should clean them up and make better presentation. I personally think, and I personally think this is what's most important to everybody, and that is the context, what I'm actually telling you and what I'm actually showing you versus whether or not my charts look pretty and what have you. I mean, I've had some people who see the aesthetics in my chart. And really, there's a lot going on here, but I'm trying to basically show you what I've learned and to teach you skills to make you a better trader. So the whole idea here is I could make a nice, clean, pretty little chart and come back to you and go, "Oh, look how pretty my everything is." But am I telling you what you want to hear? Am I telling you the real data? And look at my predictions. I warned that we were going to go down to 92.30. I warned, and look at where we went. We went down to 92.300. Perfect. I warned that we were going to have this breakdown pattern. I did it, weeks ago. And look at where we went. We're right down here to my lows, into this breakdown pattern. Now we're into this consolidation pattern, and now we're going to move down, if this plays out like I expect, into this 76,450 level, maybe this 80,450 level. So I'll mark that right here, 80,450. And I want you to be aware that it is playing out exactly like I predicted. Consolidating within the ranges, moving through these consolidation periods, rolling back up here. Now we're running back into this low again. This low has continued to the 92,300 area, has continued to be very broad support. If we break this level, which will likely happen around February, 7th, 8th, 9th, 10th, somewhere around there, I see that as the markets are breaking down into the deep V pattern, into my lower channeling around the March or the February deep V low right here, I think that Bitcoin is also going to break down and it's going to set up this deep low and then rally back out of it and then likely move into the same types of patterns that we had before. So I can kind of draw this out here. Now this is more of a guess going forward here. So we have then the 21st through the 24th. So right in this area. And then we have that March 21st, 24th area right in this area. So if we were to get the same type of a breakdown event, okay, I'll carry from here because I don't think this is going to happen. So we'll come over here to highlighter. We'll come up here, break down, consolidate, break down to the ultimate low, consolidate, set up a new excess phase peak, break down, roll through here, maybe up a little bit, and then break down. And that could be more along the lines of where we are headed with Bitcoin. Ooh, too much. Oops. So that gives you kind of an idea that, we're going to be looking potentially for this consolidation. We're going to be trying to stay above this very key support level around this area here. 72,000, 73,000. We're really going to be trying to hold up above those levels. The 50% level over here, which is 80,000 through 450, plays a very important role in my opinion. The 82,000 level also plays an important role. You can see these levels that I've marked. 82,500, which is right there. So let's see how this plays out. But ultimately, I think this is what you're looking at for Bitcoin. I think you're looking at this breakdown taking place, consolidating for about 3 or 4 days, maybe getting back up into this 98,000, 99,000 area, and then breaking down very hard come Thursday, Friday, Saturday, Sunday into this deep V low, setting up a very good base bottom and then rolling back up and out of it before we get to a secondary bottom back over here, which will set up a whole new set of excess phase peak patterns. Okay, so we're going to go back over here to the SPY, and we're going to see where we're at 93. So we're moving a bit higher, which is fine. Come back over here. Still going to be one heck of an open. I mean, really, it's going to be one heck of an open. We're talking about an opening price right now down in this area. We're moving down back into this consolidation range. I think we could see, like I said, a good solid bounce coming out of this. But my gosh, what a big breakdown. You're going to see a move from 601 down to 593. I mean, that's going to be a move about 1.5 percentage point gap, and we'll see how it plays out. If I were to try to provide any guesstimate for today, we would be looking at, like I said, this type of consolidation. So we're already kind of looking there. If we come over here and take a look at the ES, you can see. I'll go over here to 1 hour. You can kind of see it. So you can see we're moving into that consolidation right now. We've got the big gap and we're coming down into support and we're moving into consolidation, which is likely going to be the case today. I don't really see it breaking too hard to the upside. I think this is a fairly clear breakdown in the markets. And as I mentioned to you, I would kind of, essentially be looking for that rotation to play out and eventually move into the downside. Okay, so today might be pretty flat. Tomorrow might be a little bit of recovery. And like I said, if I were to, if I were to kind of play this in my head, you'd get some rolling into maybe a little bit of a breakdown at the end of the day. Then you'd get into a bit of a rally the following day, then consolidate the next day, and then breaking down into our 7th, 8th, 9th type pattern. So that's kind of my idea of what I think the markets are going to do. I think given the end of the day, we could see some unwinding of longs, especially if we don't get a big follow through rally here. And then tomorrow could be our long trade. So I'd be, possibly looking to, prepare for some calls near the end of the day today, in the fact that I think you could do well on a gap up overnight into Tuesday trading, Tuesday morning, maybe somewhere up in this area. And then I think we're going to end in consolidation and then move to a breakdown pattern pretty much by the end of Wednesday. So end of Wednesday, Thursday, Wednesday. Okay, so right over in here, I drew it a little off. So we get the breakdown, we roll through, we consolidate into this area. So, looking for calls potentially down off of these lows, looking for exits and or puts over here, potentially looking to, we have this other gap window, and there's going to be a lot of talk about whether this gets filled. My personal assumption right now is no, this does not get filled. I don't see this market having enough momentum right now to come up and carry and fill that gap right now. Maybe later, maybe, further on down the road as we move into, this rotation. Again, if we play out the breakdown, as I mentioned, this is daily. If we play out the breakdown into the February 7th low and then coming down into the 21st low and then coming into the March 21st low, then we might be able to move through this. But this gap may stay open for a while. I think this is a pretty solid breakaway gap. And just like we had back over here, we never really came back and tagged it. So we may not come back and tag this for another 4 or 5 months. Okay, I'm going to leave it there. Let's go ahead and get some today. It's going to be a good open. Can't wait to see what my numbers look like. And I will talk to you guys later.